Checking 1 2, checking 1 2. This is live. We're live. We're live. Good morning, my fellow simpletons and degenerates. I hope everyone's doing great today. Here we are once again. Um, Another day trading, another day filled with opportunity. Earning seasons is upon us, right? And some of our favorites are having earnings today. So here we are, just another day, another dollar, right? Um, we are now ready to go, and we have to check what's in store for us today. Um, what are the markets saying? What are they giving us? Let's go. All right, here we go. Let me just get on to a couple of my brokerage apps here, and we are golden. Here we go. Ooh, nice. Some of my buybacks for some cash secure puts triggered, which is good. And here we are. Good morning. How are you guys doing today? Hopefully you guys are doing well and making some bread. So it's about that time, 8 a.m. Pacific Standard Time. I am in California, but hopefully I'm reaching all over the world. So for those of you that live in the East Coast, good morning. For you guys that live in the South, good morning. Up in the Midwest, good morning. Up in the West Coast, good morning. Europe, Asia, Latin America, Australia, good morning, guys. Africa, even, Middle East, good morning. Here we go. So another day, another dollar, and we're ready to go, guys. How do I feel about the day? I've been telling you guys, I feel a little bullish. Why do I feel a little bullish? Where you just gotta look at the indexes, right? Or the indices. Some people say indexes, some indices. I say indices. How is the S&P doing today? The S&P is not doing terrible. It's up 1.26%. No, sorry, it's up 1.26 points. So that's a 0.02%, which is a nothing burger. The Dow 30 is down 225 points. The Nasdaq is up 98 points. The Russell 2000 down 5.98 points. The VIX is down a tiny bit, and gold is at $3,450. So what does that tell us? Absolutely nothing, because everything is pretty much flat, right? But that doesn't mean that there's no commotion in the market. It doesn't mean that we're not busy. It doesn't mean we're not making money. Joby is down 7%. And here's a good one that I'm looking at. Figma. Figma is down 7% almost today. I'm actually looking at Figma. Figma's a good company, right? I think it's highly overvalued. They went live, I think, last week, and they IPO'd. I think that the dumbest dummy they found was in the $140 area. I'm trying to look at the 52-week low and high. For some reason, they're not giving it to me here. But I do know there were people that paid $140, $150 for this stock when it IPO'd last week. It's sitting at $84. Now, I'm going to keep my eye on it, because I think, although overvalued, doesn't mean people are not buying it, right? But when am I going to, you guys know I love my cash secure puts. When am I going to jump in? Well, it's down 7% today, right? It's at 84. If it got down to 50, right, I would start really thinking about maybe a cash secure put in the 40s. I would not mind owning Figma for 30 something dollars. I wouldn't mind at all. I'm a long-term investor, right? So I think this will be a good trade. Options are now open on Figma, which is great. I wouldn't advise anyone to jump in just yet, but that's my personal opinion. This is not financial advice. But you know, the $80 cash secure put for October is giving you $1,300 right now. That is not terrible. $13 per share. But I think it's running hot. You know, I think it went up way too fast. I think people got greedy. People, you know, some people really don't know, you know, what companies do. They just know it IPO'd, and it's kind of like the hot ticker of the day, right? So I think that they got caught. It's been trending down since last week. You know, it was like in the 130s, then it went down to 113. It tried to come back up for a second to like 122, then went back down. So it's kind of like in a downward slope. I'm gonna look at it. I'm gonna look at it, and once in the 50s, I'm really gonna start thinking seriously about maybe jumping in. So just a ticker for you guys to think about. You know, the tag is FIG, I believe. So if you guys want to look at Figma, it's FIG. That's what it's trading under the Nasdaq. So it's just something to put in your ear so you guys can have a look-see, you know, and kind of maybe start following it. All right, here we go. Bobby Atkinson's in the house as number one. He got the number one batch. What up, Bobby? Good morning, my friend. Mando number 5 is in the house too. Batch number 2. Mando, good morning. Charlie C2 is in the house. And good morning, Savage. Hello to all. Good morning, Charlie. How you doing? Ricardo Canales is in the house. Good morning, my friend. He's saying Savage. Kent's mom is in the house. Kent's mom. Good morning, Kent's mom. How are you? I hope you're doing very good today. B-Tribe is in the house saying good morning. Mando saying good morning all. Mr. Lucky's in the house saying Savage. Mark C saying, let's make that money. Let's make that bread, my friend. Let's make that bread, man. Seriously, because that's how we eat. Mark C is saying, let's make that money. Charlie C2 saying, sold some SoFi August 8 puts spreads yesterday, 21 to 19 for 24 cents in premium per share. The stinker set to buy back today at 2. Should hit by the end of the day if the price stays above 22. We'll see. We'll see. Keep us informed. Karen D's in the house saying, hi all. What do you think about Uncle Bruce's video this morning, buying a cash secure put on GME, $20 until 1/2027? You know, okay. I agree with Uncle Bruce in a lot of things, and now that I'm a lot more of a seasoned options trader, I can agree to disagree with him. As far as the 2027 GME $20 put, well, what is it giving you? I have no problem with it because I do believe that GME is heavily undervalued, and I actually have some $30 cash secure puts expiring January 2026, which I got like $10.50 or $11 for. And they're just marinating. I'm already, you know, making money, and I'm just gonna let them sit, you know, because I got over 33% for those, right? So I'm gonna let it ride, and I do believe GME is showing signs of life. It's just not going below 21, so it lies where it is. It will pop. I think that shorters are gonna get caught with their hands in the cookie jar, and I think it's going to go past 27. Whether it's going to touch 30 or not, I think that's kind of the ceiling, and it's kind of lava at this point for it. But it doesn't mean that they can't cut through it. You know, I have nothing written against my GME shares, so I'm waiting. I'm waiting because I've been trading it, selling 25s. You know, whenever there's pops of like 10% or more on GME. And at this point, I'm taking my time and waiting just to see, because it seems like it just keeps trying to come back up, finds resistance, comes back up, finds resistance, but it's going to shoot through one day, and then not in the distant future. So I do advise not trying to time the markets. However, when you have been trading a specific stock for years, you kind of get a feel for how it trades. So it's okay to cross your arms. and see what happens. Now, I could be grossly mistaken, and it's just going to dip, right? In which case, it happens, and I will have to write some 25s out to 2026. But the goal is to write some 30s out to 2026 and make some dollars, right? So let's see. What is GME giving us? If we were to look, it's 22.90 today. I mean, it's green, but it's not, it's barely green. If you were to do some cash secure puts out to January, right? I mean, it's giving you 875. That's what I have here. It's trading, the bid is at 850 and the ask is at 9. 875, 885, a stinker. I mean, that's great. I think that's, I mean, you're getting like 45% back for, I don't know, for what, 16 months, 17 months. Not terrible, not terrible. I like it. I like that trade. I like that trade. Like I said, I'm actually writing to 2026 26 January on cash secure puts, but I do have GME 40, so 45s out to 2027. It's really hard for that premium sometimes to come down. But I still have them out there. I'm waiting for January to buy those back because I think it's still it has room to like really go down a bit more. But I have no problem with that at all. That's a good write. Jeff Glass is waving hello to people. DH Ruda is saying, "What's up, Savage? What's going on, DH?" Mr. Lucky is saying, "I am looking put credit spreads for GME expiring 12." That's great. That's good. I don't do put credit spreads, or call credit spreads. That's not what I want to talk about in my channel, because I kind of want to keep it simple for people, and I think that the less babysitting, the better. But if you have the time to keep looking at your screen the whole morning, it works for you. I think that's great. I personally, I don't like to babysit. I already have 3 kids. So, I kind of, it's not that I don't write them, right? I do some iron condors myself, but like I'm very conservative, right? And so I will do those in stock that's very, very dull, and it doesn't move much. Your Nikes, your Disneys, those are the ones. Let's see here. Charlie saying, well, that might not be a bad idea. GME put spreads, Mr. Go Lucky. Yeah, it's not a bad idea. If you think that it's gonna trade in a specific channel, I think that's what you do. All right, let's see what we got going today, folks. Let's see here. So Joby is down 7.5% today. The 52-week low for Joby is $470. The 52-week high is almost $21, $20.95. And they just outlined a $1 billion Saudi aircraft sale opportunity and planned 100 aircraft. Japan JV as certification nears. I think there's a little bit of profit taking going on. Wow, it ran up real quick. Joby was just like $10 or like 11. Yeah, in July it was like $11. In May it was $6. So it's Jesus, it's almost tripled in the last few months. It's running hot. I mean, people are profit taking. I like it. I would look for it to pull back to like 13, 12, and maybe sell some $11 cash secure puts. But as of right now, I'm just watching it. Let's see here. MTSU is there's a little pop right here, but I don't know why. Open Door Technologies is down 7% almost today. It's trading at 178. Let's see here. Well, if you get to like the 150s, 140s area, Selling 150 cash secured puts may not be a bad idea here. Go out to January. Even the 150 puts right now are giving you 43 cents. So, yeah, that's not terrible. You'd be buying the stock around $1.07. If you believe that this company is going to be around for a bit and is worth at least 150, more terrible things have happened, right? So that's if you have personally, I have just here I have I think 20 sells, $22 covered calls that I sold for 88 cents. They're worth now 59, and I'm just letting them bleed out. I'm already up $580, 32%, and they expire February. So I'm gonna let them sit. I'm gonna let them ride out. I'm probably gonna buy it closer to 50% if it gets down to that in the next few weeks. But I'm just gonna let that data decay at this point. Let's see here now. What are we doing here? Oh, AI. Okay, so AI is C3.ai is one of my babies. It's trading at 22.64. It's down almost 3% today. I like it. I have some $35 covered calls that I sold a while back, expiring in 2027. And I got, almost $8 for those. And it's trading at 353 at this point. So I'm looking to buy back under 3. I think that would be a good stinker to put out there. Let's see what the market gives us, guys. C3.ai. For you guys that have been looking to get into AI and buying opportunity right now, selling some puts for October may not be a bad idea. It's 22.63 right now. So if you wouldn't mind buying it in the $22 land, sell some 22.50s and bring in $238. The bid's at 236. The ask is at 240. You could go a penny below the ask and go to 239. Get $239 to buy AI at 22.50 in October. Not terrible at all. I mean, you literally will be buying the stock at like $20. That's a great buy for a stock that is as heavily traded as C3.ai, is heavily shorted. It's a great company, and there's not that many shares out. The float is very low. So, I mean, that is one of my money makers. I don't know about you guys, but I love trading some C3.ai, especially during earnings. It gets really volatile, and the IV is insane. I personally have some $25 puts out to October at this point, which I'm good until it gets to 22.80. Also, I'm already there. I'm daring them to put those shares to me at this point. So I like it. Give me those shares, man. I mean, that's the reason I did a cash secure put, is so that I can get the shares. Let's see what we got going here. All right, so Mr. Go Lucky and Charlie are just having a conversation amongst themselves. Ken's mom is saying, I bought 20 SoFi 25s for January on Friday. Sold today for an easy $500. So you bought $20 or 20 SoFi $25 calls. You're gonna have to help me out here. I'm guessing you're saying calls. You bought some SoFi $25 calls and you sold them a little pop today. That's not bad. I mean, you're gambling, right? But I mean, if you're okay, buying calls and losing that money, it's okay. Never invest money you're not willing to lose. So if you're, you could have made 500 obviously, and you could have lost 500. But at the end of the day, you gave yourself enough time to let the stock recover. It's not terrible, not terrible at all. Bobby's saying Rocket Lab earnings after bell today. In case you're not aware, no, I am aware. Rocket Lab has earnings. I think they're going to have good numbers, but it's not about the numbers at this point. It's about the guidance, right? So you've been seeing at this point that a lot of companies are actually crushing earnings, but their guidance, right, and their forward-looking numbers, they're decreasing them, and the street doesn't like that, and they're tanking. So I mean, look at what happened with SoFi, right? It's just, I think SoFi was one of those that I think that the convertible notes really kind of did it, right? But I mean, I think they're gonna do well, and I think they're gonna go down. I think that it's been going down kind of a little bit at a time, right, for a few weeks now, after popping so hot, and I don't know. I mean, it's a weird. Rocket Lab's weird, right? So it's a toss up, man. I think they're gonna do well on earnings, and they're gonna go down, but I don't think they're gonna go down as much as other companies. They may go down 3%. I don't think they'll be going down 10, 15, 17% like other companies. But I mean, that's what happens during earnings, right? Who knows really what people look at, because some companies do terrible. I mean, absolutely terrible, and they go up. And then other companies do great. They crush everything, earnings. They have good futures numbers, right? And yet they go down. I mean, that's the thing about earnings, man. This is why I like selling covered calls during earnings, because I take advantage of the IV. Ken's mom is also saying, then I wrote 1625 for January 2026. I like that, right? That's great. 25 is great. It's a great number. I figure you meant 2026. Let's see here. I do follow Oklo, Mark. Marcy saying, if you follow Oklo, look into LTBR. I do follow Oklo. I had the opportunity to buy them at 30, and like a dumbass. I mean, that's the one thing about being conservative, right? I waited for it to come down to 25, and it just didn't. And then it shot up to like 35, 50, 60. It's just, there's always another stock, man. There's always another stock. Coulda, shoulda, woulda, right? But I do have it here in my on my to watch list, right? Here we go. Oklo 79.34 right now. It's down almost 5% for the day. Earnings, huh? Okay. Yeah, man, that's a stock that like 52 weeks ago was $5, right? And it's just it happens. I mean, look at BBAI. They were like 50 cents or something like that, and it went up to like $20 or something. So let's see, Oklo. Look into LTBR. All right, let's see what LTBR got. LTBR. Lightbridge. Nuclear fuel technology. I figured. It's a direct competitor, I'm guessing. 52-week low, $2. 52-week high, 17. It's down 5% today, just like Oklo. All right. I'll have a look-see. I will have a look-see. Jeff Glass is saying, man, all the new tickets to me I've been writing puts on aren't looking good. AI, Sound, ACHR, STS, all down since writing. Well, I mean, so it seems like that's the market as a whole, right? It's not like it's just those tickers. It seems like the market as a whole, it's kind of like wishy-washy, and that's what happens when you don't really have a baseline, right? When you don't have an administration that is like straight shooting, and everything's in flux, so you're kind of reactive to a lot of things. um, the market doesn't like excitement, man. The market likes to be dull. The market likes to know what they're dealing with. Like, this is going to be our taxes, right? 25%. These are going to be our tariffs, 25%. This is going to be so that, all these companies know exactly what they're dealing with and just how to set money aside and how to move money. But when it's in flux the way it is, with the government running the way it's running, there's no way to prepare. So, companies are kind of like at the mercy of a megaphone, and it's kind of sad, but I mean, that's where we are. You can't trade, the way you were doing 4 years ago, 5 years ago. You got to trade this administration, right? It's the Trump Wall Street at this point, right? It's the Trump stock market. And that's just, what I got to say about that. I'm not trying to get political, but it's just, some people like it, some people don't. I personally like it because although, you know, um, there's a lot of volatility, I mean, I like volatility, right? Now, cash secure puts wise, give it time, give it time. And this is exactly why I write, out so far ahead. I write out to 3 months out, 4 or 5 months out, because I like to take big premiums because it protects me from the market going down 5, 10% or a stock going down 20%. Because even if it goes down 15, 20%, I wrote a cash secure put when a specific company was down already 10, 15% on that day. It's very unlikely for it to go down another 15%, but it does happen. And I chose, to buy or to sell that cash secure put at that price point, right? Which was, down another strike zone or two. And I got paid a premium, which means that it makes that blow, it cushions that blow, right? So, and if I get put those shares, great, because I was looking to buy it at that point where it was, but I got a discount on it. So this is exactly why I like to take big chunks, right? All right. So this is why the break even is so important. And sometimes you go even below your break even, and that's okay, because once you get put those shares, or you're down, like let's say you're below your break even kind of 5, 10%, then you could do another cash secure put below, another strike zone below that, so that if you get those put those shares, then great, you average down. That's how you play that game. Bobby Sackins is saying it's down below your break even. There it is. See, so that's another thing. Ken's mom is saying yes, buying those calls were a gamble, regretted it right away, but thankful for the pop this morning and getting out with a $500 profit. See, but again, you gave yourself enough time to where even if for like a month or two, SoFi was down and then had a big pop, you still could have came out, break even or maybe made a couple of bucks, but you made $500 and that's great. This is why I don't recommend buying calls and buying puts on this channel. Not to say not that I don't do it myself, right? I do. I'd be a hypocrite if I said I don't. Same thing with going on margin. I'd be a hypocrite if I said I don't. But I don't recommend it at all because I've been doing this for years. Some people that are brand new here, or maybe have been writing calls for like a year, maybe two. There's still so much you have to learn, and even I get confused once in a while. When I do like an iron condor, or a specific uh, put spread. It's sometimes if you don't babysit them and you're not looking at them all the time, sometimes it's easy to forget. You're like, oh, what, you know, I'm trying to remember what was that leg. You're trying to think of the long or short leg, and then you start getting confused. It's just I have so many contracts out at a specific point in time that it's just the less confusing the better, right? So I dumb it down for myself too. So let's see here. Marcy saying they make the fuel for power plants. Yeah, I read that a little bit. I'll keep a look. I'll keep a look on it. Dude is in the house saying, meanwhile, my SoFi rights are looking good. MSTR is ripping today. Yeah, you were talking about it yesterday. So see if someone would have done a cash secure put on MSTR yesterday, today they'd be smiling. Yeah. I think we have another month of chop. Seasonality says August is up and down in nowhere. Um, I've been telling you guys, August is usually very choppy and downtrending. And same thing with September. Don't expect it to get any better. October is kind of when the market starts kind of finding its footing, right? And I think it kind of starts ripping a bit. And November, um, kind of dull, but then in December we usually get a Santa rally, right? Um, Again, past performance does not dictate, what's going to happen in the future, right? But for the most part, it gives you at least like an educated guess of how things are moving. And this market is very, very similar to the market of like 2022, I think. And so I was looking at graphs, and it looks very, very similar. So I'm trading kind of a little bit like that. But I'm also looking, at the stock itself, and the stock tells me what to do, right? So if a stock goes down 15, 20% on a day, kind of like SMCI did yesterday, um, cash secure put time, and look, it started to recover, so I'm sitting pretty. And if for whatever reasons it kept going down, great. I would have done, a $30 cash secure put out to like 2027 or 20 or June 2026, and then try to average down, right? To get below that break even point. Anyways, that's how I trade, man. And I think you guys, a couple of you guys do the same, and I think that's great. Let's see here. Bobby is saying, I believe I have enough time on my side for any Rocket Lab guidance stuff. My highest is $40 cash secure put, started at 15 and 30. Started for 790, good until 2027. Okay, I think that's cool. F Gun 20 saying, hi Savage, what are your thoughts on BBAI? Is it a long term or short term? Well, I'm trading it, and I don't trade any stock if I don't feel that it's going to be around at least 5 years, right? So any company that I trade, I'm willing to hold at least 5 years through thick and thin, right? Although I'm not against, um, I'm not against sometimes taking my hat and turning around and leaving. Because sometimes if a stock is just not performing and it's just wasting space in my portfolio, I have to take a good look at it, and I have to be honest with myself and say, I shit the bed on this one. I made a bad call, and that's okay. As long as you have more good calls than bad calls, you're good. But don't be, because of pride, um, don't hold on to like the stock that is just not bringing in any money. Like I don't know if you guys have heard me before, but I always say that to me stocks are like tenants, right? And my portfolio is like a building. Um, Tenants have to pay rent, and if for whatever reasons these stocks are just not bringing in money, they're not paying rent, so I have to evict them. Sometimes for a loss, and that's okay, because then I take my money, and I use it elsewhere. As long as you're making more money than you are losing, I think that's great. And at this point, um, I think I'm outperforming the market by like 65% this year. So I mean, I'm not doing that bad, right? So I think my strategy, the way that I'm trading, totally works, and it works for me. It may not work for someone else, right? But like I say, my strategy is very conservative, right? And I'm all about keeping most of my money. And sometimes, like I said, it's okay to take a pivot and make lateral moves. Meaning, I'm okay taking money on a non-performing stock, selling the stock, even if it's for a little loss, and then using that money for cash secured puts in a stock that's definitely performing, or adding to a position. You know, nothing wrong with that at all. All right, so let's see here. NVTS. NVTS is actually up today. See, I told you guys yesterday that NVTS was ripe for some cash secured puts. If you guys would have done those sixes right now, you guys be smiling. I think sixes for October were the thing, right? Let's see here. No, sixes for September 19th, and right now those would be up. So or down in this in the cash secured put sense of the word, but you'd be making money. What is RXRX doing today? You know, it was up for a while. It was up for a few, like 3%, and now it's down again. I really like RXRX, man. Recursion Pharmaceuticals. I like it. It seems like the lows are higher now, and it was just at $6. It's now to now to 550. I just don't see it going under four again. So um, I saw some covered calls on RXRX a few weeks back, and I think it was January 2026 $10 strikes, and I brought in like 85 or 90 cents per contract. And I'm happy I did. I reluctantly did it because I wanted to get a dollar. But see, again, don't let your pride get in the way of making money. And instead of waiting for that dollar, I wrote for 90, and the stock went down, and now those are making money. So as soon as I get to like 40-50% land, I'm gonna buy those back, and then I'll let the recursion do what it does, which is take big pops. Good company. Uh, Clinical stage biotech company that combines automation, artificial intelligence, and machine learning, and in vivo validation capabilities to discover new medicine. And they actually work with some big hitters in the pharmaceutical industry, and it's all about just giving it time for the street to find out about RXRX. And I really like the stock. I like their CEO. Um, and they've been making me money for the past 2 years. I've been making money. It shot up to like $15. I sold some 12.50 covered calls. It went down, so I rolled those in. I keep rolling in. Then I bought back. Then it shot up to 10 again. I sold some 12.50s again, and then I came back down. It rolled down, and then I bought them back, and then I sold tens. And this is what I've been doing with RXRX, just making money, and that's what I like about this stock. It's again very low float. It's heavily shorted, and it can take a really big pop really quickly. And that's the type of stocks that I like. And it's a great company. Let's see what Rivian is doing today. Rivian is it's ripe for some cash secure puts, man. It's trading under $12. Yesterday would have been a great day because yesterday was down to like 11.50, I think 11.30. Um, let's see. Yeah, yesterday got down to like 11.30. Yesterday I wrote some cash secure puts on it, and I'm just I wrote some 12.50s for 9.19, expiring on 9.19. I brought in 111 uh, per put, and right now I'm $6 or underwater, and that's okay, and that's totally okay, because I want them to put those shares to me. I want some more Rivian. I really am bullish on Rivian. I can't wait to see what they come up with this year. They can't make cars fast enough. People are for whatever reasons disliking their Teslas, their Cybertrucks. Um, and they're going and jumping ship and buying Rivians. Rivians are all over California now. And I feel about Rivian the same way that I felt about Tesla in 2015, 2016, when I started to see cars in the city here in San Francisco. And I was just like, what's this? It's a nice car. It looked very futuristic, right? And I really liked it. And look at where Tesla is at now. Now, I'm not saying that Rivian is a Tesla, but I am saying that they're eating at their market, and it's a big market. They're going after the F-150 crowd. Those trucks that they make are very nice. They're very strong, and they're efficient. I think you could get like 450 miles per charge on their super pack battery, and their SUV has over 850 horsepower, I think. So, I mean, beautiful car, a lot of torque, a lot of horsepower. And for somebody that's into the clean energy, um, it's a car that's definitely worth a look at, right? They are a little expensive. So, if you want an SUV, it will cost you around $80,000, $90,000 right now. So I think the price could come down a little bit. But again, they just can't make them fast enough right now. There's orders that are there's people that have been told you're not getting their car until 2026. And so there's a wait. And that's a good thing because they just keep getting orders, and I am looking forward to buying a Rivian myself. So anyhow, what do we got here? BBAI is a long-term. Oh, yes, BBAI. Sorry, dude. I lost myself on talking here. Well, BBAI is down today, almost 3%. I have BBAI. I actually sold some $7 calls out to 2027, and I got 250 for them. I think I was trying to raise some cash, but my average cost is $4. So if I sell at 7, that's a big win for me, right? And so I'm more than doubling my money, since if you take into account that I'm selling for $7, and then and then you take into account the premium, I'm really selling for almost $9. So more than double my money. I'm okay with that. Right now, I have some some $7 puts that I got $2 for. I got 280 for those puts, and they're at 213. So I'm actually making money, and I'm just gonna wait and get assigned. Would I do cash accrue puts on it right now if I was looking at BBAI? It is a long-term hold. If it got down to 6, I think it could come down a bit. But if it got down to 6, I would not mind going and doing a $6 January cash accrue put and try to bring in $2. I mean, you could do now. You could put a stinker of 150, get 25%. Do a, let's see, it's trading at 653. You do a $6 cash accrue put, meaning that it has to come down another 54, 53 cents for you to put those shares. You ask for 150. I mean, not terrible. Out to January 2026. Worst case scenario, you can put those shares. Best case scenario, you make 25% return on your investment. I like it. I mean, that's great. I think that's a good ride. All right, let's see here. Hector is in the house saying good morning. Good morning, Hector. Jay Gill is here saying good morning, all. Jude is here saying, so you think 2023 and 2026 will similar, very bearish? Yeah, I mean, I don't know. I like to think that the trend is your friend, right? And the way we're trending right now, it's very similar to 2020. I think 2022. And so, are we gonna do the same? I mean, is it gonna be the same way and on everything? I don't know, but it's very similar. And I'm bearish. I mean, I think we're downtrending, right? So, I mean, this is for the day. right? This is how I feel about our stocks. Um, but overall, the market, I'm a little bearish on that. Yeah. Aurora is in the house saying stocks are like tenants. I love this definition. I had to kick out a couple late last year. That's okay. That's okay. If they're not paying you rent, you have to do what you got to do, right? And then you got to be honest with yourself and say, hey, I made a bad call by renting to these people, and you try to do the best you can with the next tenants coming in, right? That's it. No big deal. Or saying a couple of stocks I meant to write. So good. F Gun 20 saying that's a good quote. I think so. I sold the Charlie saying I sold another $5 January 2027 RXRX yesterday for 185. That's a good right. That's a good right. You're basically buying RXRX for 315. Very good. Ricardo Canales is saying we need some thumbs up. And we do need some thumbs up, guys. Come on, man. May share. You guys can share my page. You guys can comment. You guys can play my videos in the background. That'd be great because it helps me with gain some traction, right? And honestly, I'm uh I'm making this channel so that it gives us kind of like a little sense of a community, right? And so that people that were just looking to for something because Uncle Bruce is not live all the time anymore. Um, I figured I'd go live more often so that we have a place to go and kind of socialize. And because I like the crew, man, I like the crew that we have. And we can give each other ideas and talk about trades. And I'm the one that's got the channel, but you guys feel free to comment and kind of spitball, ideas that you guys have, or you guys are looking at a specific stock that nobody's looked at, that works too. Someone mentioned a stock that I had not thought about, and I'm going to have a look see. I think the Lightbridge is the one that they mentioned. So Lightbridge ticker is LBTR. So I'm going to have a look see. I'm sure some of you guys are also looking at the ticker now. So I think that works, man. Um, let's see, Webull. Webull, I did tell you guys that I didn't like the fact that Webull signed a contract with this one company that I think is a little shady. But I did some more research, right? And at this point, I have some cash secure puts that I wrote on it because I saw the recovery happening, and it did. I did some cash secure puts. I think some $12 cash secure puts, 12.50s, when it was like 11. So I brought in like a big chunk of change. I brought in like I think $4, 380 or $4 for some 2026 12.50 cash secure puts, which is a lot. And so the stock has recovered. It's at 15.28. Those cash secure puts are green, and I'm just gonna let it ride. I'm looking to get those shares via cash secure put. So I have some cash secure puts out to 12.50. I mean, out to January, they're 12.50s. But I'm a little bullish on some other ones I wrote where the stock went down. I think I think last week, and actually did some 15s. And those 15s I got 325 for. And we'll see what happens, man. They expire October 17th. They're $15 puts. They expire in October, and they're giving you 315 right now. So I don't think that's terrible. It's you're kind of in the money, but it's not bad. Again, never invest money you're not willing to lose, right? But I think Webull is one of those that I think they have enough money to where they can withstand, um, you know, some bad publicity, I guess. And I use it. I use Webull. I use Robinhood. This is why I invest in these companies, right? Any company that I see that I'm always investing in one way or another, I have to buy because I'm already using, um, you know, the app. right? So, and I have ridiculous amounts of money in Webull and in Hood. So, and I can only imagine, in terms of like the millions of other customers that they have, and I have memberships on these. So you multiply that membership, they're making money, right? I know I like my little Robinhood Gold that I have, um, and I just keep dumping money into them, right? And I imagine other people are dumping money into their accounts as well. So it can't be that terrible. And Webull is very, very attractive right now, under $20. Um, Webull should be $100, $75 to $100 a share. It IPO'd, right? It IPO'd and it went up to, let's see, what is the 52-week high for Webull? $79.56 is the 52-week high for Webull. It's sitting at $15 right now. I gotta take a stab at it, man. They were saying the same thing with Palantir. I think I mentioned Palantir on the Uncle Bruce show a couple of years back. And one day I think I was mentioning it so much that he was like, let's have a look at Palantir. He looked at it, he said, well, I don't like it. There's too many shares available. It's trading, in a very high PE. I mean, it's just he didn't like it at all, right? And I was telling people, they have a great CEO, they have a good board. Their contracts, they keep signing contracts. It's just, and Uncle Bruce said, well, this happens, and sometimes, these companies crash and burn. Okay, well, if I would have taken his word for it, and I wouldn't have trusted my gut, I wouldn't have made money. And then right now, I'd be like angry at him, but realistically, I should have been angry at myself, right? In a hypothetical world. Because if you were to just listen to everybody and not do your own due diligence, and sometimes you got to trust your gut, right? I wouldn't have made a ridiculous amount of money. And that's the thing. With Webull, I think I can make good money. And it's like, I know what I'm reading and I know, but I see the numbers and I see that Webull is international and they're trying to get onto all these other markets, Asia, Latin America, Europe. I mean, it's just a matter of time. So, it's not a huge position I'm on, right? That I take it in. And at this point, I'm going to use cash secure put money to keep buying shares. So at the end of the day, the Webull investment is gonna be bought with Webull money. Does that make sense? And we'll see how far I can take it. And I just can't wait to see what the company does. Right now, like I said, it's sitting at 15. The percentages are high, man. The premiums are very attractive. And like I said, selling at 12.50 for October right now. The stock's at 15.30. If you sold a 12.50 put, you could bring in $155 right now, right? I would do 160. $160 for 12 for a 12.50 put. So you're basically buying in at like 10.90. That's crazy. That's awesome. I mean, that's a great buy. It's a company that was just $80 and it's 15, and it's just not going below 12. It's just not. There's huge support at that level, and I'm just very excited to see what it does. I'm just gonna keep buying, and then see what happens. I have a good feeling about Webull. Let's see here. Archer Aviation. Archer is down a bit today. I think they have earnings, don't they? Sometimes when it comes to earnings, if it's a company that hasn't really proved itself, although I think that they've signed some contracts, I will wait. If you haven't taken a stab at Archer, Wait until after earnings and see what it does. If you do have Archer and you got nothing written against it, I don't know. I don't think earnings are going to be that great just yet. The stock is at 967. You can sell some $11 covered calls and bring in 167 bucks. So they're basically selling like at 1267 and January 16th. So that's almost $3 up from where it is now. Not a terrible thing. Now GME, I'm very, very, very intrigued by right now. The way that it's just moving. I think that GME is going to probably hit 27 sooner rather than later, right? Maybe in the next month or two. I have nothing written against GME at this point. I bought back all my covered calls, and I'm just waiting. My average is very low in the 14s. So I'm just, I'm waiting for a nice pop. If I wait for a nice pop and I sell some January, say 30s and bring in, $3-4, that would be ideal. At this point, cash secure puts out to January 2026. I would look at the $22 cash secure put. It's $22.85 at this point. It would have to come down a whole 85 cents. And you get $318. I would put a bid of or an ask of $325 and try to bring in $325 to put $2,200 at risk, right? Because you'll be buying under $20 at that point. Nothing wrong with that. GME is definitely at least $20 a share, and then just cross your arms. I wouldn't advise selling any covered calls on GME just now. Again, this is not financial advice, and this is what I would do, right? Like I wouldn't sell covered calls on GME just yet because it seems like it's just ready to pop. But if you really need some money and you need to raise some cash, sell some 25s for October, right? Selling some 25s for October brings you in right now like 185 bucks, 186 bucks. Not bad at all. You're basically, the stock will have to move, $2 and change, and then you're bringing in another $2. So that's like a $4 or $5 profit right there. So not the worst thing in the world, right? Yeah, no, that's about GME. I just see it popping. And it's trying to break through, and it just keeps getting kind of slammed down, but it keeps breaking, to the upside. So it's a matter of time. It's just a matter of time. What do we have here? Ricardo saying leave some thumbs up. JJ is in the house. Mr. Lucky is saying, Savage, if you're in the long-term hold, you should look into Starbucks. I've looked into Starbucks. The overall chart looks like it's consolidating to the upside on the monthly chart. You may not. Okay, so I live in San Francisco, right? And I really love my coffee. I actually have a Starbucks card, and they keep closing stores. There used to be like Starbucks in every corner. Then they started, scaling back, and then there was stores in every other corner. Now there's stores in every other block. Moreover, they're charging a ridiculous amount of money for coffee now. I used to get just a regular, my venti blonde roast, and it would cost me around $225. Right? Then it went from $225 to $275. Fine. Then it went from $275 to $315. Then it went from $315 to $380. So now they want me to pay, basically after $4 for a coffee, um, and the service is not as good. The lines just get bigger. Um, there's less people working in the stores, and they've taken a lot of stuff away. Like they used to have, chairs and sofas where you could sit and hang out and work on your laptop. Now they're taking the chairs away, and then there's just like little tall tables where you could like kind of stand and drink your coffee, I guess. But um, the product is not as good. I mean, I'm just, obviously San Francisco is not the whole United States, right? And Starbucks is international, but I mean, it's just a microcosm of the way things are going. And you can't grow by getting smaller, right? And so I'm just looking at the trend. So it's just it's all fugazi. The only reason why they seem to be kind of making money, if they are making money, is because they're just scaling back a ridiculous amount and they're paying people less. They have less workers. Starbucks used to be a great place to work out here. Not anymore. Now people are overworked. The workers are, not as happy. So I don't know, man. It's just Starbucks used to be somewhere cool to go and drink coffee and like maybe sit down for 15, 20 minutes. Now it seems like it's just a place to like go get coffee and that's it, And so what is setting them aside, from like other coffee shops? It used to be like Starbucks was the spot that you would go to because they were different, but not anymore. So like I'd rather put my money in Dunkin' Donuts, because Dunkin' Donuts actually has like they cater to the family, and Starbucks was catering to like the young Gen Z type, right? So I just it's not somewhere where I would put my money, right? Like I said, I maybe 3 years ago, yeah, I was making money with Starbucks. I held it, but not anymore. I just it's not worth it. It's just I just don't see what sets them aside anymore. Brent is in the house saying good afternoon. What's up, Brent? How you doing? Mr. Lucky, I mean, I disagree because I see many Starbucks opening and there's always a business. I guess we're seeing two different things. I will look more into it. Yeah, no, that's totally okay. I mean, look, if you like it, right? Nobody's going to tell me what to do with my money, right? Nobody's going to tell me how to invest. If I'm looking at a specific company and I want to invest in it, I have my reasons. I've done my DD. Yeah. But I mean, I could just see Starbucks is downtrending. Just looking at the stock, it's just downtrending. The lows get lower. And just from the investment perspective, right? The 52-week high was 117. This 52-week low was 74. It's sitting closer to 74 than it is at the 52-week high. It's being covered by 38 analysts, half of which are saying, just hold. Actually, more than half. And then, 15% are saying sell. I mean, it's just the prices keep getting higher. That's the thing, prices keep getting higher, and I rather drink my coffee at home at this point. I started bringing my own coffee. It's just better. It's a better product. And I brew my own coffee at home now, and I just, it's exactly how I like it. And I save a lot of money, and I rather put the money that I save into like stocks. So, but again, you could, if you're trading it, I'm very curious to see how it trades for the next year. But I don't think it's worth $90 a share. I don't think it's worth $30 a share. Again, we can agree to disagree. Totally okay with that. Dude is saying Starbucks got a new CEO, but the battle is still uphill at this point. It's reminding me of WBA Walgreens. They have to shrink before they can grow. If you're selling calls, it's a different story. Well, yeah, but if you're selling calls on a dying stock, right? I mean, if you buy the company at 90 and you're selling calls, you sell 95s today or 90s, a couple of months out, and then the stock goes to 80 and you're selling 85s, and then the stock goes to 70, you're selling 75s, and the stock goes to 60, 50, and you're selling 50s. The stock is going down. You're making money with covered calls, but you're not. It's not going up. It's supposed to be the other way around. So you're really losing money because the stock price is falling with the covered calls, and so realistically, you're breaking even kind of at that point, if that. And so I'd rather sell covered calls on a stock like Palantir, right? Like I like to get caught and say, shit, I sold 50s and it went to 60. And then I roll to 75s and it goes to 90, 100. I'm like, shit. Then I roll again to from 75 to 85. And then I'm like, I'm out. And at this point, I'm like at 85, 90 out to 2027. I'd rather have that and get caught on the upside, than get caught to the downside, because then at that point, you're losing money. And I'm about making money. I don't know if it makes any sense. Let's see here. Snow Moon is in the house. Snow Moon, you're very new. Welcome to the channel. Appreciate you guys watching, just so you know. Thank you for watching. Let's see here. Snow Moon is saying sold August 22nd, $15 puts for 112. Webull. You sold on August 22nd, $15 put. Okay. Not terrible. I would have personally done September, if anything. You could bring in more money, and I would have gone to the third week of September. Let me tell you guys why I like the third week of the month, because that's when contracts kind of are the strongest, because a lot of companies close out, and so that's when we have triple witching hour, right? Every quarter, and third week of the month, third Friday of the month is when volume is at its highest. It's easier to jump out and in to contracts and from contracts. So more volume, the more premium, right? This is why I like the third week of the month. So I would have gone, to the third week of September, because I think that the spread is probably shorter. If you look at the spread, the bid and ask, it's probably a lot shorter on the third week of September, that Friday, than it is on the 22nd of August, because I don't think that's the third week of the month. So I may be wrong. Let's see here. Let's see, August 8th, 12th. Yeah, so August 1st was the first Friday of the month, and the 7th and the 15th. So next week is going to be the third Friday of the month, I believe. So I would have gone to September 19th, but I mean, if it's a stock you like and you want, and then you can always roll. So nothing wrong with that. But let's see. You say you went to the $15 put for 112. So if you would have gone to September 19th for that same 15, you would have gotten in almost twice the money. You would have gotten $215. $215. I mean, that's a lot more attractive to me, and you're protected. In case it drops a little more, your break even point will be what, 1285. I like it better at 1285 than I do at your break even would be 1388. So yeah, you can always roll. You're bringing in almost 10%. Well, not really, but I mean, for a few weeks, it's not terrible. I would have gone, like I said, I would have gone to the third Friday of September, but October would be better because you get even a bigger chunk. But I mean, that's cool. If it's a stock that you want and you're bullish on it, I totally okay. I'm okay with that. That's not terrible. Dude is saying Starbucks on the 5-year looks like it can't break out at inflation. There may be better places to put your money in. I agree. I agree, and that's exactly what I'm talking about. It's just you can't get bigger by getting smaller, right? You can't grow by getting smaller. Also, they keep taking things away, and the more they take away, the more they charge for coffee, which makes no sense, right? You would think that because they're charging now um, two times that which they were charging when I first started going to Starbucks, you would think you're getting two times more things for your money, right? So instead of having just sofas and chairs, you would think they have like these nice little waterfalls and TVs out there and stuff, but they don't. It actually looks like just like jail. Not that I've been to jail. I'm just saying when you watch movies, people are just standing in line, and then you have that, you know, that prisoner that's with a spatula or the big spoon that's just serving like nasty shit to people like right on their tray, like next, next. That's what Starbucks remind me of. Listen, we have a coffee spot here called Fields Coffee. Same price for coffee, and it's better product. And Fields Coffee is a San Francisco coffee. It's a company that's from San Francisco. And if I'm going to put money into a company that's going to charge me $5 for a cup of coffee, I'd rather pay it to Fields because I actually know Phil, and because I like their product. It's really really good coffee, and what they do is they don't um, they don't just burn the beans. They actually they melt the beans, and I like it because it's the coffee can sometimes you can ask for it to be extra creamy and half sweet. I mean, you can ask for wherever you want, and they'll give it to you. And then they also happen to have avocado toast. Um, it's the same price point as Starbucks, but a product is actually better. And so if I'm going to spend $5 on a cup of coffee, I'd rather have a way better experience than a not as good experience and just buy it because it's Starbucks. Again, we can agree to disagree, but that's just, it's my money and I get to choose to spend it however I want, right? And that's the bottom line. Chase Rosita Parker is in the house. Good morning, Rosita. How you doing? Mark C is saying it's part of business. The more you pay for labor, the less your bottom line is. Cuts have to be made somewhere to ensure profits. Yeah, but if you start cutting what made you um, kind of the place to go, then I have no reason to go, right? If your cuts start going into like the quality of the product, then what am I paying for, right? So I don't like it. I like I said, I brew my coffee at home. I actually can get better coffee at home because I, go to Costco, and Costco has some great coffee. They have this like, a Colombian roast sometimes, and we get some Guatemalan roast or some Costa Rican roast. Those are extremely really good coffees, and they don't have that at Starbucks. And when I do go to Starbucks, I'm in line for a long time because there's not as many Starbucks around. I'm standing, nothing to do, and I don't have a place to sit. So like, for what? For me to pay more money for a product that is subpar at this point, when I can have a way better experience if I go to Fields. So that's all I'm saying. All right. So Jeff Glass, Duncan is weird. All the locations closed in my part of the country back in early '90s. Last couple of years are suddenly building new ones everywhere. Yeah, so I went to school back east, right? And Dunkin' was everywhere, especially in the Boston area. And man, I remember my first time ever at a Dunkin' Donuts. This has to have been like in '99. Um, it was during Halloween time. It was in October. They had a special. It was like 100 donut holes for $5. Now I don't know about you guys, but you know as a wrestler, I used to cut weight a lot, right? And but the terrible thing about cutting weight a lot is that you won't eat for many days, and then you'll just go on a binge, right? And it just turns out that I had just wrestled the whole tournament. I think I had won the tournament, and then I went to Boston to visit a school, and so I see a Dunkin' Donuts. I'd never seen a Dunkin' Donuts because I'm from California, and I'm like, "What's a Dunkin' Donuts?" And then my buddy explained that that's when where you get coffee. Now I didn't drink coffee back then. I didn't start drinking coffee until I had my first kid. But I remember seeing like all these flyers for like Halloween, and it was like very, very cool, man. Because I'm big into Halloween. And then I went in and I smelled the Dunkin' Donuts smell, right? And it just smelled pleasant. And I saw this big sign that said special 100 donut holes for $5, and I was like, holy shit, are you kidding me? 500, I mean 100 donut holes for $5. And I asked that the lady, and the lady is like, yeah, can I have 100 please? And they had different types, and I was like, oh my god, can I have 20 of these, 20 of that, 20 of these, 20 of those, 20? And I ate 100 donut holes, guys. And that was my first experience at Dunkin' Donuts, with Dunkin' Donuts. I had 100 fucking donut holes, and my stomach hurt so bad. And then I was super wired on all that fucking sugar. And then I remember just like feeling terrible because I was just like, I'm a fat ass. I was like, I gotta go run. So I went and I to visit actually a couple of colleges, and then I went back to school, and then I went for like a run for like 2 hours, and I just felt terrible. And then I felt like I crashed. All that sugar made me crash. So then I'm like sleeping for like hours, and it's the middle of the day, and then like this, oh my god, that was my first experience at a Dunkin' Donuts. So it just so happens that they have a Dunkin' Donuts near my house now, and my kids they love the frappuccinos, or like the flavored coffees that they have, and then macchiatos and all that stuff. My eldest kid at least, and I always go and I get them, like they have different types of donuts, right? So I get like a donut each for them, and they have specials. They have like a family special and stuff, and I think that that's kind of cool because that's what their target audience is, right? It's families, and I think that it's there are more families than there is like hipsters and like Gen Zers at this point. Um, and that's what I like about Dunkin' Donuts. And if I was to invest my money, in a coffee company, it probably wouldn't be Starbucks. It'd probably be Dunkin' Donuts, just because I see it flying more than Starbucks. But that's just me speaking as an investor, right? Not not with my feelings, just seeing the way that they are going kind of apart, right? And that's what sets them aside. Dutch Bros. Now, see that Dutch Bros. That's another one. I totally would put my money in Dutch Bros. If I was um, looking for an investment into the coffee companies, I would totally, totally. I mean, Dutch Bros at this point is eating Starbucks' lunch, and I think that's another thing. Is there's more competition, better competition. And they just opened a Dutch Bros down the street from where I live, and let me tell you, there's a line. There's lines that are insane, and it just seeing the vast difference when it comes to the product and the way that it's that the product is served. It's just vastly different, and that's my 2 cents on that. So let's see here. Misty Tree Woodcrafts. What's up, Misty Tree Woodcrafts? Are you James of the Misty Tree? I'm gonna go with yes, but I don't know. Ahoy! I made it during a live. Lucky 27. What's up, buddy? How you doing? It's funny listening to the story because, like Jeff Glass, we grew up seeing the commercials all the time. But when they tanked and now they're back and rebranded as almost a destination. Yeah, yeah, yeah. I agree. I agree. Snow Moon on my Webull position, it's like the expiration before earnings. It's a 6% return for 15 days or 100%, 180% annualized. Well, 180% annualized given, if everything stayed the same, right? So, um, but it doesn't. However, 6% return for 15 days, not terrible. I'm not saying it's not, look, I'm not saying it was a bad write. All I'm saying is I like to take bigger chunks, right? And the thing is that, we don't know how earnings are going to go. I like to capitalize on that IV. Um, and I like to sell covered calls or cash secure puts so that I can take advantage of that volatility, and the premiums are higher. So I don't know how Webull is going to what the numbers are going to be like, right? But I'm imagining I just don't think they're going to make as much money in the future as they have made, because people are losing jobs, because inflation is pretty high, so people are taking money that they would to invest so that they can buy groceries now. I mean, there's a study that was just done that shows that I think a very high percentage of people are using credit cards to buy groceries now. They're putting it on the card, and then they're a lot of people are on default. So defaults are up when it comes to credit cards. It's just the whole thing, right? And I just don't think people are putting as much money into investing as they were earlier on. So I think that guidance is going to be lower, and I think that's what the key is going to be. I could absolutely be wrong. Of course, I could, but I'm willing to take a bigger chunk. And if I'm wrong, then I'm wrong. But I took $3 off on the top, and so and if I'm right, then the stock is going to fall, another $2, $3, and it's going to be sitting in the $11 land. And then I'll do some $10 cash secure puts out to January 2026 and try to bring in 20-25%. So, but don't let nobody tell you how to invest. You have your own reasons on why you invest and how you're investing, and I think that's great. As long as you're investing and you're consistent, I think that's what it's all about, right? So, and I like that. I like that. I like that people have, their own way of thinking. Everybody's different on how they invest. There's so many ways to skin a cat, right? As long as you have a naked cat at the end of the day, that's what matters. Let's see here. Misty saying it's James. Yep, Dutch Bro started an hour for me, and it's expanding like crazy. But they're addicting people with all the drinks overflowing with sugar. Also, the owners are creeps. I don't know the owners, and I haven't really looked into Dutch Bros, but I'll take your word for it. I just do know that um, the couple of times we go to Dutch Bros, um, it was really good coffee. I by far better than Starbucks. That's all I'm saying. And just the amount of people in line, right, waiting. And I'm talking about cars here, not just lines like in the store, but cars like around the block waiting to go into the drive-through. Um, it was quite something. Um, Anyhow, that's what I saw. Right. Let's see here. Hey, I'm very curious to see if you guys are trading cash secure puts or covered calls on some stocks that we haven't talked about. Feel free to let me know so we can have a look see and see what you guys are doing. Um, Also, are you guys liking these lives at 8 a.m.? Does that work for you guys? Because I think I don't know. I don't know if I should go at 9 or at 8 a.m. 8 a.m. works for me because I get to trade for like an hour and a half, right? And I get my trades kind of done, and then and then I can sit down and kind of talk about the market and how it's going thus far. But I was also thinking of coming in like at 12, 1 hour before market closes. Let's see how the Dow is doing now. The S&P is down. It's pretty much unchanged since earlier on. Everything's unchanged. The VIX is up 2%. Gold is up $20. I mean, everything's unchanged today, man. S&P, Dow, Russell 2000. It's a nothing burger day, like Uncle Bruce would say. I miss the old man too, guys. But yeah, so it's a nothing burger day. I was actually looking into. I know D-Wave Quantum has their earnings today, and it's down now a little more than earlier, but D-Wave Quantum QBTS has their earnings, and man, the IV is ridiculous right now. If you guys were looking to get into D-Wave Quantum, like you guys were looking for a quantum company in computing systems, this would be the one, guys. They're based out of Palo Alto, 220 employees. It's trading at $17 right now. Volume is 45 million today. Their average volume is 44 million, so it's right there. And if I was to trade, I mean, I already have puts on them, but if I was to trade this, I would go to October, and I would do $17 cash secured puts and bring in $2.63. Try to bring in $2.63. So you're protected up to 1450 ish. And if they have, bad earnings, then you could do nothing. You could wait to see what earnings done, right? But if you want to take advantage of the volatility, if I own this stock, which I don't own this stock yet, I like to own it via cash secured puts. But if I own this stock, I would sell some $20 covered calls up to October and bring in $205. Because it have to go up almost $3, right, for it to hit the $20 land. And if they ship the bed, you can buy back that contract for like 40-30% later on in the next week. So that's how I would play that. But if I really wanted to own it, which I do, I sold $18 cash secured puts for $4.75 a few days ago. So I'm protected. My break-even point is $13.25. Stock is sitting at $17.36. That's almost $4 of protection. I took a big chunk, and that's how I'm playing it. That's how I'm playing that one, and I'm getting paid while at it. I'm okay being put those shares because that would start me a position in a company that I think has a future. So let's see here. What do we got here? The lives work, whatever works for you, Jay Gill is saying. I like 8 a.m. much better than 5:30 a.m. Me too. Kilua Dre saying this time is better rather than the aftermarket closes. Then you can still talk about trades live. 8 a.m. works. Root had pretty good earnings this morning and is getting clobbered. Yeah, see, that's what I'm saying. Snow Moon is saying Root had pretty good earnings and is getting clobbered. Well, that's what I'm trying to say. So, it's an insurance company which engages in the provision of insurance services. It offers mobile telematics and technology platforms to segment individual risk based on complex behavioral data. The 52-week high of 181. $34.52 low, and it's $92. It's lost 24% today. Holy shit balls. Yeah, it's getting clobbered, all right. Their guidance is down. Guidance is down, I'm guessing. Sure. Let's see the put side here. If you did a $90 cash secure put right now, it'll give you $15 pretty much. You would ask for 15. I would ask for $15.75 or $16 for that $90 cash secure put. It's already down 25%. I mean, is it going to go down to 50%? I highly doubt it. But I mean, I this is the first time I look at this, so there's a reason it went down so much. I would look into that. I'm not looking for any insurance company at this point, but there's always opportunity, guys. And that's what I was saying. You know, some companies could have good numbers, but if guidance is down, you know, that's how they get clobbered, man. And so with Robinhood, you know, I think they're going to have good numbers. Guidance is going to be down a bit, but I don't think it's going to fall 25%. You know, but again, I'm taking advantage of the IV because bigger premiums, right? And then I gotta talk to myself and say, hey, would you be okay buying this stock at $12, $11? And the answer is yes. So there's nothing wrong with that. In October, let's say for whatever reasons, in October the stock is in the $10 land, right? I could say, hey, let me put those shares, or I could roll my cash secure put down to like, you know, January, right? The October to January, and then bring in another dollar or two. So that gives my cost basis goes even lower. I've done that. I've been doing that with RXRX to the point where my cost basis is going to be like $3 or two something. So at this point in for September, I am looking to put those shares. I have some $6 cash secure puts that I've been rolling for a while. And at this point, I want the stock. I want the stock because it's it's the cost to borrow is too high. The cost to borrow is high, and there's the float is very low. So at this point, I'm going to wait for a pop because of some shorting going on, and I think that the shorts are going to get caught, and the stock is going to pop to $8-9, and that's when I'm going to sell some $10 cover calls out to January 2026 and try to bring in $3, $4 a share. And if I get taken out at 10, oh well, I make $3-4 in premium. The average the cost basis is like in the threes. What is wrong with that? I'm making like $1,000 per share or per every 100 shares, right? So there's nothing wrong with that at all. I'm in here to make money. So that's me. I'm here to make bread, and that's what I'm doing. Let's see what we got here. Kilua Dre saying, do you have a favorite company that you invest in? Just curious. SoFi, GME, HIMS. You know, I had to get emotions out of trading, and that's why I got in trouble a couple of times with my emotions, because I really, especially SoFi, my position was my biggest holding. I think it still is. I like 20,000 shares. And I was just like, I didn't want to lose my shares, right? And I had to get that mentality out. And then I sold, 1250s and 15s out to like January 2026. And then I got caught, right? But I mean, I made a lot of premium. So, and at first I was like, man, I'm going to lose my shares. And I thought about it and I was like, what am I losing? Nothing. I mean, it's just, I don't have the shares like here at home. They're not like in a drawer somewhere, it's just all make believe. It's like, it's a number. I made money. I made money, and I'm going to receive a ridiculous amount of money on January 2026. And then I'm going to put that large sum of money to work and do cash secure puts and some other stuff. And SoFi is still going to be there. I could, SoFi, I could do $20 cash secure puts. If SoFi's at 30, I could do $25 cash secure puts on SoFi and then get some more shares that way. At the end of the day, as long as I'm making money, that's what matters. Now, having a favorite stock, I don't have a favorite stock. No, I have favorite stocks to ride on. Um, that's different. But honestly, I'll be honest with you. Open was, I think, this year my favorite stock to ride on, just because my average is like 70 cents or like 80 cents, because I averaged down so much, and then it popped and I had nothing written against it. So I sold the stock at like in the fours, and I sold in the threes, and then I sold covered calls, and I mean, I just made a chunk of money on that, and my wife did as well because she was on it. And I mean, that was my favorite so far this year, because such a little stock made us a nice chunk of change. Um, but to ride on, I mean, dude, I love C3.ai. I love Unity. I love GME. You know, I love riding on SoFi. Um, I just like writing, man. I just like making money, right? I like writing, and I like looking at the specific strikes. I like looking at different areas. I like looking at premiums, and the more premium, the better, right? And I like seeing my portfolio expand, and that's what I like. Um, let's see here. Beach Boy saying, "What's up, Savage Beach Boy? Shalom, my friend. Shalom. Hope you're doing well over there in Israel. You came in kind of late, my friend. I've been on more than an hour and a half now. So Starbucks coffee is crap. Yes, I'm a coffee snob. A few good coffee, in my opinion. Stumptown from Portland, Roots in Michigan, Joe Coffee, New York, Beans, and Mass. You should try Fields Coffee in San Francisco if you get a chance, man. Fields. Anybody that lives near San Francisco, if you're in San Francisco, go to Fields Coffee. Excellent bagels. I'm just gonna say that, excellent bagels. Great coffee. I mean, and it's a really cool ambiance. Um, anyhow, uh, my friends, it's time for me to go. I've been on for an hour and a half now, and it's time to go be a dad. And so thank you for watching. I really appreciate you guys. I'm gonna be on again tomorrow at 8 a.m. So, actually, no, I have to go to the doctor tomorrow morning because of my back. Um, so, hour of power, maybe around 12 mid afternoon, I'm gonna come on so we can see what the market did. But I will go live tomorrow. It's just not gonna be at 8 a.m. because I have to go to the doctor. But until then, thank you, you scallywags. I will be seeing you guys tomorrow. I hope you guys have a great day. I hope you guys made money. I'm going to be looking at, a couple of trades. Oh, you know what? I'm actually going to probably, you know what? Hold on. There is a company I wanted to talk to you guys about. And I think I talked about it before, but AAOI. AAOI. Yes, that's the company I wanted to talk about. You guys may want to have a look-see. It's great. Premiums, great to ride on. It's been, I think, in the 13 land, it jumped to like 30. It's back down to 22. I think this would be a great addition to any portfolio. I advise selling a put up to January. The $20 puts right now are bringing you in 430. So you could make $430 to put away $20. Actually, I'm going to do that right now because I'm going to put my money where my mouth is. I'm going to do a $20 cash secure put to January 2026. Boom, there it is. Let's see if it triggers. Let's do it live. It's sold. There it is. I just did. I was the first of the day, so no bullshit here. I just did a trade live. I'm going to do a trade live so you guys can see it. AAOI, $20 cash secure put. The stock is at 22.38. It has to come down below 20. My break even is 15.70. Nothing wrong with that. If I get put those shares, so be it. If it gets down to 6 to 15, I will do some 12 or some $10 cash secure puts. That's how you play this game. That's how you make bread. That's how you become the savage of Wall Street, baby. And that's how we do it. Look at that. I'm solely by myself. Lonesome Kicker. Volume 1. 430 last trade, high and low. Beautiful, baby. If one of you guys can outdo me and get, 440 for it, I'm looking for that. I know it'll be one of you guys. I hope you guys make a lot of bread today and make a lot of money. I just did a trade live. You guys saw it, no BSing, and it triggered. All right. D-Dog came out with numbers today. They beat analysts. Any thoughts? None. I don't follow Datadog. Thanks for giving us some time, Savage, says Charlie. Have a great day. Kilua is saying, cheers. Misty is saying, ordering from Phil's now. Thanks for the tip. I would advise their coffee. Oh gosh, it's called. It's evading me right now. But there is a coffee that I absolutely love, and I can't, for the life of me, think of it right now. Filtered Soul. That's what it is. It's the Filtered Soul. Friggin' awesome coffee. That's my favorite. Extra creamy, half sweet. Excellent, excellent, excellent coffee. Missy's saying, oh, and the stock stuff too. That's what's up. Marcy's saying later, have a great day. You scallywags, I will see you guys tomorrow, mid-afternoon, California time. Until then, you simpletons and degenerates, take care. Peace out. One love.